What a couple of days for the bond market. There has been some very strong positive reaction to the Fed's most recent meeting where they basically said, hey, we're starting to see how things are changing a little bit. We're going to change our tune a little bit, and that is very, very well received in the market. So I want to show you a few things. This is the 10-year Treasury, and we've kind of seen it go way up. October was a really rough month, and it stayed up here. We tested this very critical 5% level for a while, and then we started to kind of ease back, and then yesterday and today we saw some nice downward movement. And so how this kind of translates into other things that are important, there's what's known as the Fed dot plot. So the 19 Fed members that vote on what's going to happen with the rate, anonymously, they will kind of get their take on what's going to happen. And so in September, just September of this year, this is what it looked like. So the same baseline, 5% left to right. They had, majority of the members said, hey, while we're right here, we think that in 2024, yeah, we can probably do a little bit of rate cutting. One member thought we actually needed to go up. The other was going to say we're going to stay the same. But there wasn't much kind of vote that there would be lower. Well, look what has changed from September to December. We now have a couple of folks that say there'll be 0 cuts in 2024. There's one that thinks it'll be a 25 basis point cut. Now the majority of them are somewhere between 50 and 100 basis points. So basically going from about 5.5 down to 4.5. The other thing is we've got one member who thinks that in the span of 2024, there'll be a 150 basis point cut. But what's key here is the number of Fed members of the 19 that vote that are now in this camp versus where they were or even above that line from September to December. So what does this mean? This means that hopefully rates will continue to kind of ease back a little bit on the mortgage front, and that's welcome news. But here is the flip side to that, and I say this all the time, and it is becoming an increasing sense of urgency. If you or someone that you care about is excited about purchasing a home, while this news is great and will help make rates more approachable and make affordability better, it will also bring a lot of people off the sidelines. So now, right now is the time to act for anyone excited to purchase a house, whether it's an investment home, that next home, a first home, because as these rates continue to hopefully get better as we go through 2024, it's just going to make it tougher to compete in that market. So I appreciate the opportunity to share this information with you. As always, let us know if you have any questions.